Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. In this video, I'll speak about EURUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders. This is what the big players in the market are doing on EURUSD, so hedge funds, institutions, and how they're moving and shifting their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. Starting here from the monthly time frame, what we can see is that we have a market which at the moment is rejecting to the upside a quite strong historical structured zone. This level, in fact, which we spoke about quite a few times, has been acting as a very strong monthly historical support and demand area in multiple occasions. There is only one time that the market broke below the level, then immediately broke back above, and again, the market continued respecting this level as support and demand. And in fact, the market has now tested once again the exact same zone and is already rejecting it to the upside quite aggressively. So more bullish price action could be expected away from the level, as already happened in the past every time that the market was testing this exact same zone. So let's keep all of this in mind and drop down on the weekly time frame. Now, from a weekly perspective, the situation is very clear as well. We can notice a perfect inversion of trend from a weekly standpoint. We went from creating weekly lower lows and lower highs to then printing this double bottom here. And now the market is creating higher highs and higher lows. Now you have to keep in mind that this is the textbook definition of a shift from a weekly bearish market to a weekly bullish market, with the transition pattern being this double bottom here. In fact, the definition of a bearish market is the creation of lower lows and lower highs. And the definition of a bullish market is the creation of higher highs and higher lows. And in this case, we had a double bottom, which was essentially the inversion pattern of this trend from a weekly standpoint. So as the market is shifting from weekly bearish to weekly bullish, there is definitely a possibility of seeing more bullish price action being created. However, it is important to keep in mind that, as we have just said, no market just goes up in a straight line. Along the way, there will be impulses and corrections which create those higher highs and higher lows. So since the last move was this impulse, the next logical step would be to see first a correction and then more potential bullish continuation. So let's keep all of this in mind and drop down on the daily time frame. From a daily perspective, the situation is very clear. I did speak about EURUSD when the market had created this M pattern. I explained all the reasons for which I was expecting a rejection to the upside. And in fact, that is exactly what the market did. And you can go and check out that previous analysis for more free education. And I will link it in the description of the video. After the impulse to the upside, I was expecting a correction before more bullish continuation, and we had a huge impulse to the upside, and now finally the market is starting with that daily correction. So we have to identify what kind of structure we have here on the daily time frame for a potential reversal area from the correction and the continuation to the upside. But before we identify what kind of structure we have here from a daily perspective, first, let's go and see what we have when it comes to the commitment of traders. So what the big players in the market are doing and how they're moving and shifting their orders. Now, if we're looking at the data for the euro, we have to keep in mind that already we're looking at EURUSD because all currencies on the spot are traded against the USD. So if we're looking at the data for the euro, we're actually already looking at EURUSD. And we can notice how with the last reports, we went from minus 66.6k net positions all the way up to minus 10.1k net positions. So we had a clear increase of net positions, meaning that institutions have been moving back to the bullish side for the euro, therefore to the bullish side for Euro USD, with 2,500 longs added to the last report and 12,700 shorts getting closed. So as institutions are moving back to the bullish side for Euro USD, making it stronger, more bullish price action could be expected. We can notice, in fact, how institutions have risen their longs from 153K all the way up to 185K, while at the same time, institutions have been decreasing their shorts from 230K to 195K. So institutions on EURUSD are increasing longs and decreasing shorts, therefore making it stronger. So let's keep that in mind and move back to the chart. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find also linked in the description for more free education. Now, here on the daily time frame, the structure is quite clear. We have a market which has previous daily resistance here. This red candle here is the first time that during this massive impulse to the upside, the market faced some resistance. So some bearish price action, basically, with the market closing red. Immediately after that, clearly the buyers were in control, so they pushed the price higher, breaking above that level. So now this is previous daily resistance, which has now turned support here. We can also notice that as we have an impulse and now the start of a correction, if we want to measure this correction after the impulse, we have to take our Fibonacci from the low to the high of the impulse leg, which shows us how we have the 0.5, 0.618, and 0.786 Fibonacci retracements lining up exactly with that previous resistance turn support, creating confluence of support and demand. And when there is confluence of support and demand, that increases the probability of seeing institutional longing, potentially increasing even more the probabilities of more bullish continuation and the creation and completion of this daily impulse correction, impulse pattern to the upside. So if institutions will test this confluence of demand and support, there is definitely, if the market will test this demand and support area, there is definitely the possibility of seeing more institutional longing, potentially pushing this price higher. So in a situation like this, what would I expect? Well, as my students know very well, trading is reactive and not predictive. The monthly, weekly, and daily time frames combined with the COT data, those are the best time frames when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best time frames for that are the intraday time frames, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to a bullish market, I wouldn't be surprised to see a potential rejection to the upside for the market to complete this daily impulse correction and impulse pattern to the upside. That definitely wouldn't surprise me. Now, all this free education and analysis that you see me share online is just the tip of the iceberg. If you want to learn more, I really suggest that you head over to the link in description, which will bring you to the website in which you have the possibility to gain access to the best trading program on the planet. Here, you will learn and gain access to all my courses. So from the very basics of charting all the way to the more advanced topics like building automated trading strategies using the MQL4 language, building portfolios of strategies and optimizing them with tools like the Quant Analyzer, and much more. You also have the possibility to gain access to the Trading Station software with the Telegram notification integrations, one-on-one private mentoring directly with me, the COT data software, which you very often see me use on my free analysis. You also have the possibility, if you want to join the integrations, so you gain access to all my personally developed EAs. You see them here presented directly on the website. You also have the possibility to gain access to the live trading show. So essentially a live stream of all trades coming directly from my account as they're open, closed, and managed. And if you scroll down, you will see that after the testimonials for the current time slot, there is still some time to join with the special. So essentially, you have the possibility for still around 3 days to gain access with the discounted price directly from the website and gain automatically access with the email and password that you will create during the checkout process. So I really suggest to go and check it out. The link is in the description and I will see you in it. If you enjoyed the video, make sure to drop a like. Also, let me know in the comments below any pairs or topics that you would like me to cover in the next videos, and I will see you in my next breakdown.